Hey everybody, this is the DeFi Addict and I'm back again with some news. I think the Crypto Canuck is still snoring, so this is why I'm doing it by myself again, because I just couldn't let this wait till tonight. This is some great news that I read on Twitter, and let's go. Let's start with this French financial analyst saying that the $15 billion loan that Credit Suisse got from the Swiss National Bank is a good thing.
Il fallait absolument taper fort pour redonner un peu confiance dans les marchés au Crédit Suisse. C'est proactif, donc il n'y a pas besoin réellement de cet argent.
Sorry. So he's saying it's just to restore confidence in Credit Suisse. They don't really need that money. They don't really need $50 billion. But because of the liquidity in Credit Suisse is very good at the moment.
Les liquidités du Crédit Suisse sont très bonnes. Ils ont donné quelques chiffres au 14 mars. C'est simplement vraiment pour rassurer les marchés. Ils vont même...
Yeah, so it's really to reinstore confidence in the markets. And they are going to buy back some debts they had that costs a lot of money to that bank.
Dettes qui leur coûtaient cher. Donc c'est en fait des bonnes nouvelles hier soir et ce matin. Dès qu'on...
It is very good news. I don't understand. But let's go to the second thing I saw on Twitter, and I absolutely love this too. Let's hear this.
So in less than a week, Silicon Valley Bank collapsed and Signature Bank, and of course everybody is concerned that this is part of a trend that will really tank the U.S. economy. Then today, shares in Credit Suisse hit an all-time low. The bank has been struggling for a while now, for several years. Last year, Credit Suisse reported an annual net loss of $8 billion.
$8 billion in net loss last year, 2022. It is the most loss since 2008. The biggest loss since 2008.
The largest since 2008. Late today, the Swiss National Bank said it will support Credit Suisse. So that's good, apparently, maybe.
Well, yeah, it is good. Didn't you hear the French guy?
But the overall picture is scary. So how did this happen? What exactly are we watching? We thought it'd be nice to be joined by someone who's been in this world for a long time. David Sachs is the co-founder and partner at Craft Ventures, also the co-founder of PayPal and host of the All In podcast. He joins us tonight. David, thank you so much for coming on. I'm just going to stand back and let you explain what you think is causing this.
Well, Tucker, I think what's going on here, there's a bunch of issues that were particular to Credit Suisse. They've had a series of scandals and compliance issues and exec changes.
Scandals? Okay.
Over the past few years, but there is a common pattern here with what...
Okay, so he's saying that they are having a lot of scandals. I'm not going to go back to the French guy, but he said, nah, it's just, it was just FUD. And this guy is really talking about scandal, so who do I have to believe?
What's happening in the U.S. banking system, which is these banks are under tremendous stress right now. And if there's weaknesses at these banks, they're getting flushed out and exposed, and deposits are leaving the system very quickly, causing these banks to be imperiled, and then potentially creating the risk of the next cascading failure, because all these banks are sort of interlinked, and this is where you get sort of systemic risk. So what is causing this stress? I would posit that the reason for the stress is that we've had this rate tightening cycle for the last year. It's the fastest time that interest rates have been hiked by the Fed in our entire lifetimes. And what caused that? It was the worst inflation in 40 years. So this is basically what is putting tremendous stress on the whole banking system, is that rates have gone up so violently and so suddenly that deposits are leaving because they're going to other alternatives like money market funds, but also
other alternatives, crypto?
Assets on the books that were supposed to be safe, like long-dated bonds, T-bills, mortgage bonds, all of a sudden they've become toxic assets. They were supposed to be safe assets. Now they're basically toxic. And I think that everybody's trying to understand how deep this problem goes. And it's good in a sense that, you know, whether it's the Swiss government or the Fed is kind of taking steps to intervene and prevent a total run on the banks. I think that's good. But the problem is we've had such bad Fed policy.
Bad Fed policy, guys. So I'm not American, but this is also affecting me here in Europe. Bad Fed policy.
For the last number of years now, that it's entirely too little too late. And
But
that's what makes the situation really scary.
So I think you described it well. Back to inflation. We had scary inflation just about a year ago. What caused that inflation? Let's go
Now, this is a very important and interesting part.
even farther back, if you don't mind.
Yeah, I mean, it's really simple. What causes inflation is money printing and excessive
Money printing again.
spending. We had trillions and trillions of dollars being spent and printed out of Washington. And this started even before the Biden administration, but Biden really took it to a new level. Remember, in the
Biden took it to a new level. Let's hear this.
first quarter of his presidency, we had that American Rescue Plan, which is $2 trillion of COVID relief that we didn't need because COVID was
You hear that? They injected some money, $2 trillion, I think, that they didn't need.
winding down. And the economy had already recovered and was hot. And that's why even Larry Summers warned him at the time. Economists of their own party said, listen, this risks inflation. And sure enough, the inflation came just 4 months later. And what did they do? They said it was transitory. It was a big lie. Yellen and Powell and Biden all said that this is transitory so they could keep spending more money. And the Fed kept printing and QE continued for another 6 months. I would posit that 6 months really created the bubble of 2021. The markets got super frothy. That's when tons of sort of hot deposits went into SVB and other banks. Right. And it took the risk to another level. I mean, in other words, these guys ran the economy at 150 miles an hour, and then they slammed on the brakes. Right. And what you're seeing now is the resulting car crash. And the only thing we don't know is whether this is a 2-car crash or a 20-car pileup on the highway. And, if they had just acted last summer or that summer of 2021, when we first got that inflation print of 5.1%, if they had said, okay, we have a problem, this is not transitory, it's real. If they had started raising rates then, they could have done it more gradually. We would have had a lot more time, and we wouldn't have needed such a violent cycle of interest rate hikes that have now basically caused this enormous stress on the banking system.
So nicely put. Thank you for bringing it back to that, because all of this feels like the product of distortion of our economy by Washington, and it sounds like it was. David Sachs, appreciate your coming on.
What else can I say? Guys, keep on DeFi, keep on going in crypto. We will boom soon, I hope. I'm not a financial advisor, but keep on doing what you do, guys. Keep on going. Keep on searching for alternatives. Well, there's one alternative we are already doing, and that is crypto, Bitcoin, DeFi. With that being said, I'm saying to you, see you next time.